Good morning, ladies and gentlemen. Would like to talk about the situation that's happening in the S&P 500 and also in the stock market. We saw the recent latest announcement that the Fed is going to buy corporate bonds. Okay, uh, I'm not gonna go into the details so much, but it's about 750 billion. Okay, but essentially they're indirectly doing it. But what I want to talk about is the significance of it. Okay, we see that the S&P went down from 3001 to 3000 level. Okay, 2985, I would say 3000. And we saw that the Fed tried to set a support, a Fed support. What it means is that the Fed is signaling the market, hey guys, we are going to start intervening whenever the market falls below 3000. And we want you to keep pumping up the market although the situation is not 100% good yet. Why do I say the situation is not 100% good? I am not a fear monger. I just look at data. Okay, I I just look at data. I am not a financial advisor. I am not a doctor. This is just for entertainment purpose only, as usual. We want to look at Italy. This is the daily new cases at Italy. This is it went up, then it goes down. Went up, go down. It goes up, then it goes down. Okay, it goes down really low, low compared to the top, and the bottom is really low. It's pretty obvious. Okay, now we want to look at the United States, the USA. Now, what's going on now? Want to look at the dailies. It goes up, it goes down a little bit, and it stays the same. So, what is going on? We haven't experienced a first wave. This is not a first wave, 100%. Okay, this is not the first wave. So we haven't got through the first wave yet. Want to look at Japan? Okay, Japan, yes. This is the number of infected active case. Oh, no, not active cases. I don't look. I want to look at new cases. It goes up, then it goes down. Goes up, then it goes down. Okay. What is going on? This is one wave. They experience one wave. They might experience a second wave here. This is a possible second wave. So what does he say? It means what this means that the market fears that the the current situation, the current huge situation that is causing all the lockdowns, uh, isn't settled yet. It is still going on, although at a less alarming rate. Okay, it is still going on. So basically, what we see is the situation is still going on. We don't like it, but you don't like it, but this is what we see here. We look at the graph and we see situation is still going on, guys. Okay, okay. We can see the numbers still about 20,000 to 25,000 every day. Okay, hopefully this doesn't go up. If this goes up to 40, then we will hear the word lockdown again coming out. Okay, why sometimes do I feel so pissed off? Okay, very pissed off at what the Fed is doing. The Fed is setting their stance at 2,980 for S&P 500. We want to look at 2019's graph 1 year. Okay, 2,900 is about 3,000. This is where they are setting the the point. Okay, they are setting the point. Their support point is roughly here. This point. Does it make sense to you guys when the unemployment rate is so high, when the situation is still going on, when the GDP is primed to drop? Does it make sense for the level to to set the level here? No, right? You don't expect to set the level here. Right? There's a situation going on. You don't expect the growth to go up like that, like crazy, right? Okay. Maybe you want to set it at the 2018 level. Okay. The median of 2018 is somewhere here. Maybe you want to set it here, 2700. Maybe you want to set it here. Okay, 2800. Okay. You are not setting it at the right position. This is what is my peeve about. Why am I so angry with the Fed about? Why are you setting it at 3000? That is too high. The 3000, the implied support, okay, I call it the Fed support. The Fed support, why you set it at 3000? That's too high. Come on, please. What you are doing, you are forcing the market up. You are propping the market up. Why does the market go up? Because money is becoming worthless. The US dollars is becoming more and more worthless because you keep printing it to buy bonds of companies to save the companies. You're not even saving them; they're already saved. Bonds levels, the bond yields they already dropped. You are not saving anybody. Okay, what you are doing is politics. You are trying to prop the market up for politics. Is it good? Is it bad? That is your problem. Okay, that is your problem. That is your problem. That is your sin. I am not going to politics. But this is what is going on here. We can see that there is some politics going on here. That is too high to make sense. Okay, why? If I were the Fed, I wouldn't drop it there. I would at least go back one more year, 2018. 2018's median is around here, 2007. Oh, I won't take 2007. I will take 2018's high. Well, high is also not very good idea. I think, yeah, okay, I'll take 2000. 2900, then I start intervening. They start intervening at 3000. But the best point is always the median. The best point to choose is always the median. Okay, the median is roughly about 2007 because you see a drop here. You should count it also. 2700. I would start intervening 2700 or 2800. You intervene at 3000, I don't think it will be effective. Okay, what you will create is a zombie market. Zombie market. Basically, the market goes up because of the Fed printing money only, printing money only, printing money only. No growth, no growth of the profits, no growth in revenue. Okay. For example, Apple reached all-time high. I don't know why. I don't know how Apple reached all-time high. Seriously, 50% of their revenue comes from selling iPhones. I'm not sure how people are going to be able to buy iPhones this year. I am 100% sure second quarter result won't be pretty. Third quarter result, fourth quarter result also won't be pretty. It will start becoming better next year. Okay, it will start improving next year, second half of next year, or second quarter of 2021. It will start to improve. Now, this is pumping the market up at 3000 is basically an efficient way to transfer money from the poor to the rich. Why do I say that? Because the rich own the stock market, right? They own stocks, they own all the assets, they own all the property. The poor people get what? Salary, wages. And the wages don't increase as much as the inflation. This is disguised. Okay, this is a disguised, hidden transfer of wealth from the poor to the rich. This will make the inequality, the wealth inequality bigger. Okay, Why do I say this is unnecessary? You don't need to do this. You don't need to do this. You already prop up the bond market. The Fed already made sure that the bond market is well taken care of. The yield is already low. Okay. Now this is very suspicious. This is definitely politically motivated. 100%, 100% this is motivated. Why? It was too high. The level doesn't make sense. It has to be at least 2008 before it makes sense, or 2900 before it makes sense. Intervening at 3000 is folly. Second, will the market go up above 3200? Okay, 3300. This is the highest level, 3380. I don't think they will reach 3380. The most they reach is 3225. This is what I think the market will go up until. The market will go up until 3225, and then it will start dropping again, going down. Where will it go down to? The implied Fed support level, about 3000 to 3050 to 3100. Okay, what's going on? What will happen to the market? Go sideways for a while. It won't even move. Is this good or is this bad? Obviously, this is bad, right? The market doesn't move at all, doesn't go up, doesn't go down. The fact that the market is even at this level is because it's propped up by the Fed. Okay, so this is an artificially propped up market created by more and more worthless US dollar. This is what's happening. It's not because of growth, it's because of more a worsening US dollar, a worsening value of US dollar, day by day, month by month. Okay. Now, I understand that politics it matters. Okay, politics and the stock market always has some connection. There's a correlation that if the stock market keeps going up, how many keeps going up before the election, usually the presiding or the ruling coalition will win again. There's some probability on that. Okay, there's some probability on that. So yes, politics do matter apparently, and they will try to keep pumping it up, pumping it up. Why do another proof that what we see the jobs, May jobs. We saw that the May jobs it added jobs, right? Yeah. Yeah, but apparently, if you look at the fine print, they say they did admit that they didn't count it correctly. There was a disclaimer there that they missed out about what 3 million, is it? Was it 3 million? Yeah, 3 million jobs labeled incorrectly. So it will actually cause a loss of job, still loss of job in May. It didn't cause a gain in about 2.5. It actually caused about a loss, still a loss of 500,000, was it? If I'm not mistaken. If I'm not mistaken. So we see that politics has taken over this, okay, trying to give us, it dares to give us false data, although with a disclaimer, so that they don't get sued lah, obviously. So what happens? How should we trade this market? This is what I think. Because this is not a good time yet. The market is grossly overvalued. I would not buy anything here at the current level. I will not buy anything that is but if I buy, I will buy only those that actually are they are earning money in this situation. They are they are earning money in this situation, or at least they are increasing their growth. Okay, not only to increase growth, at least they are growing. Or if they are not growing, at least they just stay the same. Revenue stay the same, already good enough. But I would not buy a lot at this level. Why? I think it's still overpriced. Overpriced because what? You see companies making loss, companies cutting dividends, companies doing that. But you see the level, you only jump back 1 year. You only jump back 1 year, if you think about it. Huh? No, a few months only. You only jump back a few months, basically. You are only jumping back what? 6 months, is it? You only jump back 6 months. Makes sense, huh? You all think about it. I will let you guys think about it. Now, this is the Fed implied level. So even 1 year from today, from today, the Fed implied support. This is the Fed telling the world, hey, we will intervene 2980. Not even a year has passed since that level. Okay? Since this level, not even a year has passed. How many months only? October, November, December. It's 9 months. You see, we only expect to reset back to 9 months. That is the lowest we can go. We have to keep going up. How do we go up? Inflation. Print money. Print money. Print money. We can keep printing money. This is why gold is very high now. This may even reach 2000 soon. No joke. If they keep doing that, if they keep doing what they have been doing, gold can reach 2000. No, 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 hands down. If they keep pumping the market like that, what they are doing, 3000 to 2980, we will pump. 2980 we will pump. What happens if this market go down again? Then they say, oh, we're going to print money again. What happens? They're going to print money again. What happens to the price of gold? Gold will keep going up like nuts. Why? Because, hey, they got to print money. They're going to keep printing money. They're going to keep printing money. This is very dangerous, actually. This is very dangerous. Why is this very dangerous? 1 year ago, gold is, the median is about only what? 1530. Now it's 1700. Went up by more than 10%. Uh, that's all, guys. Thank you so much for listening. I don't have any stock trading ideas right now because the thing is the S&P is too high. But if the S&P, this is one of the trading ideas I would do. If the S&P go up to 3002 again, 3200, you guys can try shorting SPY. SPY is an index fund that mimics S&P 500. You can try shorting SPY. Or you can try shorting Apple. Or you can try shorting stocks that will go down, okay? Why am I not putting my money in so much in this situation is because I think the market is not giving us good value. Okay, the market is not giving us good value. Stocks is at 2019 level, right? I say the so we only flash back for 9 months. That's what we did. We only flash back for 9 months. We only reset for 9 months. While the unemployment rate is still high, okay, and also there's still politics that are giving us false information, trying to artificially pump the market. So I will not be tempted to buy any stocks right now unless I know that the revenue is safe or the you can see growth in it. Okay, but those you can see growth in it like Amazon or the online retailers, I don't see any more good plays with it. The only play I can see is maybe the malls that are opening that has been whacked really hard during the crisis, and the price, I think they already went up 100% since the lowest, but now they are what again? They are still pretty high. I would say they are still pretty high compared to what we expect, and they can go bankrupt anytime. Why do I say they can go bankrupt anytime? Retail tenants, they only collected about 26% retail. the retail landlords, they only collected about 26% of their rent for the past week, for the past month, sorry, for the past month, I think past few months. 25% is not a good number, definitely. It's not a good number. I was expecting 25%. I was actually expecting 50, but 25%, oh my god, that is crazy, man. Hopefully this number will go up to at least 50%. Now for them it's only survival. For these malls now, for these tenants at the malls, their hope now is just to survive only, survive. We just want to get money to survive, to pay our debtors, not to. They are not expecting to even equate 2019's revenue, I think, or 2019's profit. They're not expecting to equate. They are only expecting the how do I not make a loss this year? How do I minimize my loss this year? That's what they are doing. So that will be all, I think, guys. The strategy, I think the best strategy I have, maybe if this goes up to 3,205, you guys can try shorting it, and then when the number go down to 3,000, 2,983,000, you guys can start buying again. Then as it goes down, you buy again, then you sell again. You buy and sell. You know the resistance. You all know the support 3,000. Okay, let's just hope the Fed will not change their stance at the 3,000 level. Okay, we don't know what's going to happen. The Fed may be crazy again. Then they move up their. Yes, they are crazy. They will move up their implied support at 3,100. But if they move up the implied support at 3,100, I think Congress can start grilling them, because they are artificially inflating the market. They should be called in by the SEC for market manipulation, actually. 100%, these guys. Jerome Powell. They did well in reducing the bond yields. Now companies can start issuing bonds at decent yield. They don't. They already bought the bond ETFs. Why they are still trying to buy individual company bonds? They are trying to pump the market. No choice. Okay. So that's all, guys. Just be careful of the Fed, and know that this is this is an overpriced market. Okay. You go in at your own risk, and for the strategies I mentioned, it's not 100%. There is some risk involved. I am not a financial advisor. Do your own research and make your own decisions. This is for entertainment purpose only. That's all. Thank you.